Hello, happy Monday, everybody.
Steve, what's happening? Yes, happy Monday as well. I want to thank
Happy
everybody.
test drive Monday,
It
Manic
is
Monday.
a test drive on top of regular Monday. So needless to say, we've been very busy here at Trade Ideas today. Always busy, but even a little bit busier today. So once again, thanks everybody for popping in. Got some interesting stuff to share with you guys here today. And it's April 16th. Tomorrow, I guess, is officially tax day since it fell on a weekend. I think it's the 17th. But in any case, it is upon us. So hopefully everybody has that taken care of, or you filed your extension or whatever. So enough about that. Before we get into the good stuff, let's do the legal disclaimer real quick here. And just want to make sure everybody in attendance is aware of the fact that all of the information that we share with you during these webinars or any other webinar is for educational purposes only. So if you do need investment advice, please seek out a registered investment advisor or a stockbroker, some other licensed individual that can help you take care of those needs. Okay. Now, for those of you who might be a test driver right now, maybe you're in over the first time, I just want to take a quick moment to let you new people know that not only do we have world-class scanning technology, one of its kind, but we've also built a vibrant community around the technology. Kind of all starts up there at the very top. Barry's Trading Room opened 30 minutes before the open and moderated by Mr. Barry Anderson. Getting quite the crowd in there, north of 500 people typically. And it's a really great place to learn if you're new. And you can even go in there even if you're not a TI subscriber. So there's no charge for that room, even if you're not a subscriber. Most people that go in there not subscribers end up becoming subscribers. So Barry does a really good job at calling out his trades, explaining his techniques, and at the same time showing you how he uses the TI technology. So if you haven't been taking advantage of that, get in there and check it out. Of course, today it's Monday. You got myself and Steve. Tomorrow, Tuesday, Steve's going to take the helm for the trade of the week. Andy Linloff rides shotgun with him. Hump day, Wednesday comes around. We like to change it up a little bit and bring in Dan, the CEO, and Brad, the CTO. Always interesting. And then, of course, on the 1 hour webinars, Andy rounds it out on Thursdays with Trading Studio, and I ride shotgun with him. Now, of course, as you probably all already know, we've got the Friday support session, which has been a big hit thus far and will continue to be so. It's pretty much just geared up for anything TI related, just short of some of the advanced stuff like Brokerage Plus. However, I think Brokerage Plus is getting close to coming out of beta phase. When it does, then we'll start having more support for that module as well. Now, what you can't see on here are the TI University webinars that we've added Monday through Thursday, which start at noon Eastern and go to about 1:30. Along the same vein of the Friday support session, these are educational, everything from novice on Monday and Tuesday, Wednesday, Thursday on up to advanced. So once again, 12 to 1:30 p.m. Eastern, and you can sign up for those via our website. So lots of stuff going on here. That's 9 webinars per week, and that's a lot of rich information.
That's 36 a month, Jamie.
I know, that's quite a bit of webinars that we're putting on.
Is that right? 9 times 4? Yeah, 36.
You are correct, sir.
My times tables.
you have your little table right there that you're looking at?
I was counting on fingers.
Yeah, so today here's what we have to discuss. Market recap. Steve, I guess if you're ready, I will go ahead
and I'm ready.
Pass this
on over. Happy to talk about what happened and what's going on here on the daily charts. All right, as usual, you'll see we're going to start off here with the SPY, which is the ETF proxy for the benchmark S&P 500, which is really the most widely used benchmark in relation to performances and things like that. So what we've noticed over the last few days or a couple weeks here is this interplay with the 200-day moving average. You know, we touched it way back here, and then we really smashed through it and busted back and forth a couple times, and we've been basically lifting off of that 200. However, we've been lifting off that 200 with declining volume, as you can see down here in my blue volume bars. We are running right smack into a resistance ×2. Let me explain what I mean by that. The first one is the 50-day moving average, and the 50-day moving average is declining, and as you can see, the price today just barely tagged that declining 50-day moving average. But what I meant when I said it was two-pronged, basically got to go to the intraday here to see what else I'm seeing. All right, and this is one of the reasons, I'll touch a little bit on that before tomorrow, why a trade of the week was not called to the long side. It's basically a continuation of last week's trade if the market failed at these levels. And here's what I'm seeing, everybody. All right, this is a very long stretched out 15-minute chart, and I'm going to highlight that to kind of show you what a textbook, we don't know yet, but it could be a textbook basing formation here. You know, big dip down here, and then higher lows kind of coming off that. A lot of little cup and handles kind of moving as we get towards this major pivot level. You know, this pivot level, I could adjust maybe a little bit more. It was support here. It became resistance here. And just above these levels right here is where that 50-day moving average also happens to be corresponding. So we've done a lot of work to try and dig out of this 200-day moving average hole, and we are drifting higher on light volume. Light volume, of course, in these bars are graphically indicated here, but we're running right smack into a pivot level as indicated on this chart, and that orange line, believe it or not, probably pretty much lines up perfectly. There it is. I don't even have to draw it. Lines up perfectly with our 50-day moving average. What's it going to take? I mean, obviously, I'm kind of neutral to maybe slightly bearish here because I would like to see this lower high not be a lower high if you're a bull. If we stop dead in the tracks and the sellers jump right back in here, we very well could fall back down. I don't know that to be the case, but I'm looking at this as, you know, kind of a no man's land play here. And in terms of, you know, getting back to the trade of the week, which I'll discuss more in depth tomorrow, the reason we did not select a long trade of the week is I would like to see this resolve. You know, calling a trade of the week just for the sake of calling a long-sided trade of the week, you know, could be running lambs to slaughter, because it's quite possible that the market may peek its head above here and completely run out of steam and then collapse. And I might add that as Jamie talks about the ebook later in the slides, the ebook is the kind of thing that this is addressing. And we don't really know if we're in a buy the dip down here or if we're in a sell the rip up here until this pattern in my book, this basing 15-minute looking pattern, resolves itself. It did not resolve itself today. It basically gave us a little spinning top doji with the high end barely kissing the declining moving average. We could see some fireworks tomorrow. We could see some resolution tomorrow. But if tomorrow, and I'm talking in this webinar, we've got a nice green candle closing up here above 270.50 or something very strong close above the declining blue line 50-day moving average, I'll turn my hat around and start saying, you know, that was an interesting pullback. That was a lot of back and forth congestion. We remained in no man's land here for a few weeks. But if we can get back above these levels right here, which I think were very critical today, the high end of today's range, then if we can close above those levels, then maybe the bull cap gets spun back around to the front side, and we can stop being so wishy-washy on, are we going up or are we going down? Because in no man's land, you're basically guessing. And again, I didn't want to throw out a guess out there only to have a stock trigger to the upside, and then maybe tomorrow we run smack into that resistance and we start to sell off again, and anything that triggered to the long side is going to get caught in the downdraft of the general market. That's my biggest concern right now. So therefore, you know, calling cash is kind of an easy way out, and sometimes it has to be done. But since, you know, the SPY in my world, I'm going to go back to the daily chart here. Back on this day where we bounced nicely off that green candle, had a doji, reversed that doji into kind of an island reversal. The low end of this wick right here actually is the trigger to go short the S&P, SPY that is, however, using SPXU as a vehicle. And those lines will basically line up to that blue line right there. It's the exact inverse. So it's a long week. There's still 4 more days. If we do, in fact, have a big downdraft and we take out this level right here, my thinking is it's a head start to the critical level, which is right here. And there's nothing wrong with getting a head start sometimes if you're starting to feel like, we're going to break out of the majority of this congestion here. So those are just some of my thoughts on the trade of the week. I'll expand on those a lot more tomorrow. But what did we have today again in the market? We had a very low volume. Let's take a look at the single stock window. S&P on an up day did 0.66 of normal 1.0 relative volume. That means it did not finish the day with its normal volume that particular ETF normally has. So therefore, the small, tiny little volume bar down here corresponding to about 5 or 6 days of low volume up move running right smack into a buzzsaw, perhaps not. I think tomorrow may tell, but I think this market's going to need some good earnings or some good Fed talk or some good economic data points to really push through and then close on high volume. If that's the case, then the bear hat is off, the wishy-washy no man's land hat is off, and we could be looking for some more longs for next week. All right, so anemic volume, we've determined that in the spiders. What about the Qs? 0.60, even less. Look at this tiny little volume bar down here. It's not even half of what it was Friday. And they gave us another little spinning doji top. No winners today. Dojis mean nobody won. The bulls didn't win, the bears didn't win. Just a lot of elbows were thrown, and that's where we closed. But the following day after a doji, if you can take out the high or the low, that can sometimes signify what the next couple days might have in store. The 50-day moving average is just a hint below where the S&Ps are. So for the most part, our big major benchmarks here, the S&P and the NASDAQ, are showing some low volume creeping up into this 50-period moving average. And we're going to need a close above that moving average, which will also resolve that pivot line that I showed you here in the S&P 15-minute chart that looks like a base. Hey, that looks like a textbook base, but we don't know if it's a base until we close above the pivot line, because I've seen it before. We can squeak above for 15 minutes, and then the sellers come in with vengeance. And if we have a bad close down here in the low end of no man's land, that is going to completely destroy this base that the bulls are hoping to have developed here. All right, Marcia, second year of presidential term, worst of the 4 years since 1928. Yeah, we're not off to a great start this year, Marcia, but that's what happens when we have like 40% returns, across the board in a lot of stocks and indexes last year. I fully expected coming into this year to be kind of a year of rest. There's just no way you can keep that kind of pace going, whether it's an individual stock or a complete list of indexes with weighted stocks. I don't know, honorable mention, diamonds, look at this, similar. See, I didn't even look at this until this moment. Flirting and then having difficulty with the declining moving average. So this seems to be the last net involved in the bounces. We're either going to resolve and push through it and close above it, or this blue line 50-day moving average declining is going to catch a lot of things. Interesting, the IWM is basically the most buoyant of all. As you can see, the IWM Russell 2000 is in fact back above all of their key moving averages, and these moving averages are not sloping down. They're starting to flatten, and the 10 is starting to move back up. So what does this tell us? The low cap stocks, small cap stocks, and the Russell 2000 might be worth keeping an eye on here, because at the moment, out of the 4 indexes we just looked at via ETFs, IWM seems to have the most buoyancy, but the benchmark S&P and the Qs have a lot of work to do to get a close back above that moving average. And I'll just finish one more time imprinting on this S&P. We got a pivot point, a very strong pivot level, and the 50-day moving average, and this is our major benchmark. And one last look here on the 15-minute version. You can see a base is trying to form, but will this base break out of its initial pivot point? If it can, great for the bulls. If it can't, bulls beware. All right, that's all I got. Hopefully that made sense, Anna, Andy, Jamie.
Good stuff as always, Steve. Good stuff. All right.
All right.
And of course, I think you're right on target with that. It's just a wait and see.
It's a guess right now. If you want to go long and guess, you might be good for a half a day, but selling could commence above that pivot line on those 15-minute base building and the 15 spies you're trying to build. And that's what I see.
True, true, true. So getting back to my screen here, of course, market recap, Holly recap. Well, Holly was a busy girl today. Now, oops, get rid of this, push it over here for a second, and let us just talk about what Holly did. But first, usually I have expectations up here, not a lot to talk about. I did want to point out the fact that compare account readings today were kind of not very useful. I wanted to show this because most of the time we're getting some good information out of these windows, but as I like to say, I mean, nothing is the holy grail. Every once in a while.
The volumes today were pretty weak too, we have to remember.
Exactly. So, doesn't negate the fact that selling was a lot higher in the opening 15 minutes, as we can see here, 64 and 63% respectively, whether it's the 4 billion or the 5.4 billion, and then even significant selling on the smaller caps as well. But today, here we are looking at the spiders. Let me get them over here. After the first 15 minutes, this is where we're getting the reading right here. So typically what do we do in that case? We wait for a setup or some type of good signal to come to us. Now, if we're seeing that information at the end of this candle right here, we put in a high already, we put in a low, and then what do we do after that time period? After that first 15 minutes and we get those heavy downside readings, we just meandered sideways here and then broke to the upside. But keep in mind, as Steve was pointing out, these numbers were a lot lower back then, and they were pretty pathetic on the finish. I mean, to see the SPY only come in at 0.66 of normal volume, I mean, not too far away from just half normal volume. So, things were just a little bit out of whack today, and that is a characteristic of being in a choppy mess like this. And of course, I need to come through here and get rid of some of my lines. But hey, it's the same chart that Steve was looking at. And just as he said, unless we close above these levels, well then, this is our home for a while. Whether we're going to cycle back down or meander along the top edge, I mean, we really need a catalyst to get us out of there. So it's just kind of all bets are off right now until the market picks a direction. Now, so typically we use these windows for expectations. Things didn't really pan out, but I want to show an example because all of you who watch these windows and hear me talk about them, you notice the correlations and you know that they're pretty accurate most of the time. But just like any other metric that we use, whether it's Bollinger Bands, Fibonacci's, convergence, or VWAP, or any other indicator, or any other data set that we use typically, every once in a while, more times than not, it's going to be pretty accurate, but we're going to have those days where it's kind of hard to make sense out of anything. And this seems to be one of the days as far as these indicators went. So just kind of wanted to address that and point that out. We'll see what happens tomorrow. Now, Holly, boy, I knew as soon as I saw this big strategy count, because we went to a fairly small strategy count right to an 11 count on the strategies today. And we can see 8 of those were long and the rest were short, only 3 shorts. And Holly today, for this type of activity and where we are in this range, Holly was a very busy girl. Some could say maybe even overtraded, right? Because we had, I believe it's 20 what here, 10, 14, 17, 20, 24, 26 trades to get up $1.64, which, hey, I'll take it. But that's a lot of trades to get up $1.64. And of course, risk off won the day today. Risk on, I mean, look, is this an EKG? Is this a seismograph? What is this thing? Because up, down, I mean, vacillations all over the place, all the way back to the 0 line, some even dipping back and forth, and then almost shooting all the way back up to highs several times throughout the day. And of course, after everything was said and done on that trade count, if you would have held everything, not quite a flat, but down 15 cents, right? And of course, that jives with what we're seeing here. Now, of course, Holly, obeying her rule set, obeying her stop losses, profit targets, and all that good stuff, was able to clip out a little bit today. And here are the trades. You take a look here and see, these are the top performing strategies here. 3 of 3 on this guy, 2 of 2, 1 of 1. Not such bad performance on power hour long. Came in at 60%, ended up kicking out 66.7 or 2 out of 3, and then the guys that underperformed down here. So in keeping with tradition, there was some decent risk on activity out here today from Holly. Now, I've got 3 different examples here of risk on potential. And of course, those of you who might be joining for the first time, I'm focusing on risk on versus risk off on the actual trade blotter. Now, just to go over risk off, simply Holly obeying her rule set, risk on if we're holding every play until the close. Now, here we have GBX. We can see it was a Holly trade about, I don't know, 3 hours after the open. Tailwind was the strategy. GBX, she netted 13 cents on risk off using her profit save option. All right, so just to recap everything, every time a trade is exited, you're going to see the reason for that exit here. Now, we've got profit targets, we've got stop losses, and we've got timed holds. But in addition to that, we've got the ability for Holly to peel out of a long early using profit save, or get out of a loser early using reduce risk. So in this case, profit save was used, and we can see the entry right here that Holly called out. Right here, blue line corresponding with the entry line. I'll just throw an arrow up there for easy peasy reference. And the red area here, of course, is the stop loss. Now, GBX, Holly uses profit save, only stays in the trade. Let's see, GBX came from Tailwind, and when we look right here, we can see that was designed around a 2-hour hold time here. Now, she only made it about an hour and a half before she decided to pull the plug because it was starting to stall out a little bit. So she plugs out, and we can see the risk off section here. Not the timeliest exit right here, but still, nonetheless, makes 13 cents on that. Now we're looking at risk on, saying, ooh, here at the close, you would have been up 60 cents. So the goal is just to get some of this spread here between risk off and risk on. Now that's a pretty significant spread. You know, we got what, 47 cents in there between 13 and 60. So of course, we all know that we're not going to capture all of that, but the goal is just to get a little bit more. So we're in the trade with Holly. We're up here, then we're down here. Now, depending on who you are and what you were looking at, maybe when this is starting to go up, you're thinking to yourself, well, I know Holly has all these design parameters and hold times and stop losses and profit targets, but you know what? It's never a bad idea just to look over here at the daily and go, all right. I made the entry with Holly. We got a little flat line right after it, which is not necessarily a bad thing. And then we look over here and try to ascertain, well, how much room might this thing have, right? And of course, it got a little bit outside of that wick here at the close, but right here, you'll notice, and notice if I have my crosshair synced, when I come up here to this first little peak, it lines up perfectly with this little wick from a few days back, and of course, that is where it took its first pullback. So we can always use the daily to try to figure out how much room we might have in there in addition to the parameters that Holly is using. So she gets out and only takes 13 cents. So once again, what's the best way to get in the mode of trying to get a little bit more by going risk on an individual trade basis? And the easiest way to do it is maybe to do a little bit of half, do half and half, get out of that first half with Holly, and then stay in the second half for risk on move, and use your stop loss on the second lot as a break even. Now, of course, this is a textbook example. We take the 13 cents with Holly, we stay in the other one, we adjust our stop loss from the original back to this blue line here, which would be break even or right about there. Now, of course, this one came close, but did it get us out with the 0 stop loss? No, it did not. So there was a little head fake, which stocks do all the time, and then a run back up to new highs and finished pretty strong on the day. So using that simple technique, taking half off the plate with Holly, setting your stop loss for the second lot and adjusting it to a break even, you would have been rewarded on this one. Now, whether you got all of it or some of it, doesn't really matter as long as you got some of it. 13 cents versus 60. There's plenty of room to get in there and maneuver. But once again, just wanted to show how this one almost got us out, but you did stay in, and that's what we want to see. Now, where's the next one here? Let's see. There was a larger one on here. Okay. Pod. once again, Holly takes 8 cents. Really interesting entry here because as soon as we get into it, what does it do? Just starts hugging that line, passes back and forth through it. How many times there? 1, 2, 3, 4 before it finally got a little bit of a lift. And, you know, ladies and gentlemen, this is nothing to write home about, but the methodology is the same, right? 8 versus 18, a little over 2 times what Holly made on risk off. So she stays in it, gets a little bored as it is not heading our way, up and down, plus or minus a few pennies, or in this case, 8 cents. Holly gets out. The corresponding gradient here is Holly getting out on risk off. And then we can apply the same methodology. All right, I'm in 200. I see Holly getting impatient. Since I'm getting used to this, I'm going to go ahead and plug out of 100 with Holly. I'm going to use the same methodology. Now, we were broaching that 0 line several times, but look, after the exit, no more wicks down to the 0 line. So once again, setting your stop loss back to flat, you would have gotten to enjoy a little bit more alpha, 18 cents potential versus 8. So if you captured 10, 12, or 14, that is a big difference. It may not seem like a big difference on a trade-by-trade basis, especially when you're looking at 8 versus 18. But boy, you start tallying those numbers up over a month, 3-month, a year period, and a few extra pennies on a trade here and there can make a very significant difference. You know, a lot of people, a lot of guys I know, they're still trading very heavily. They're on a per share basis. They're like, well, you know, all I got to do is make a penny and a half a share on average to make really good money because their commissions are so cheap on a per share basis. It sounds so simple. But actually netting a penny, 2 pennies a share, not quite so easy. So, you know, using this methodology may not seem like a big deal, scalping an extra 5 nickel here, dime there, but over the long term, it sure does add up. And then on some of them, you can make significantly more than a nickel or a dime. Now, the next one is a good example because it is an example of going risk on that failed, all right? And it's in this soda trade right here, which was pushing through resistance, which had a decent day today, spit out 2 and 1 on both of them. So here we have the entry line right here. Let me just put a little arrow for easy reference. There we go, right here. Holly makes the call. And then, of course, we get a little wiggly right here in this bar, and then, boom, a nice up move, which is always what we like to see. Sooner the better. Now, Holly gets out, pretty timely exit on the soda, right? Nets 57 cents, getting out right up here with the sell arrow. Very good timing on that one, just missed the top of the wick, and that's fine. So we employ the same strategy, and we go, all right, getting out of half with Holly, gonna put my stop loss for break even, and then shortly after, whoosh, stop out. So no harm, no foul. We flatted the second lot. We still made money on the first lot, and that's really the name of the game, is ensuring by taking money on that first lot, it's going to be a profitable trade. It might be more profitable, or that's all you might get. And in this case, that was all you got because it did come down here and tempt that line, stops everybody out, and of course, as these things often do, then returns to new highs, right? But this seems to be the flavor of the day. A lot of stocks pulled back and did that just because there wasn't a strong trend and there wasn't any accompanying volume on the overall indices. And when that happens, we typically start to see this, all right? So once again, when we're talking about expectations, when you see 2 or 3 hours into the day or an hour into the day and you see these types of metrics on relative volume on the indices, you know the volume is low. It almost looks just like, what was it, last Friday, a couple of Fridays ago, where we had the slow walk up on light volume, only to be followed by some bad news and more of the volume being to the downside as we went to new lows.
On Friday?
Yeah.
Yeah.
Only difference is today we didn't go to new lows on the SPY. We did pull off a little bit from the tops, but I think the market's kind of trying to find its feet. It is Monday, and like you said, Steve, I think we're going to see, you know, probably some decent action tomorrow, whether that's up or down.
Hopefully some resolution tomorrow or the next day.
Whether it's up or down, another story completely. Okay, so that's really all about the Holly highlights. Looking at the losers that she did take today. Let me just sort by these. Looks like her risk management on in her stop hits was doing a decent job today. Not a lot of variation between what she took and where the stock ended up. Of course, these values don't adjust after she stopped out either, so that's why we're seeing duplicate values here.
Maybe I wasn't paying attention, but did you talk about risk on, risk off, and how that can be used?
Yes, I did.
Okay, I was answering a question then.
No worries, no worries. Let me just check out the questions panel here, make sure I don't need to reiterate something. Why is the sell sometimes at the middle of the chart and sometimes at the end of the day? Okay, David, I think I understand the question. Now you're talking about when Holly gets out? Okay, so that's all going to be predicated on the hold time that you see here, right? We're looking at the strategies panel, and every strategy is designed around a different intraday hold time. So if the stop loss or profit target has not been executed, or Holly hasn't gotten out prematurely on a profit save or reduced risk, and the timed hold goes, then that's when you'll see, the timed exits. For example, breakout strategy, that one's designed to try and hold most of the day and to get out 15 minutes before the close. Since I'm on West Coast time, that's 12:45 here on the West Coast. Market closes at 1. So that's why you'll see some exits short, some exits longer. And then, of course, on risk off, you're going to be seeing just an overall tally of whatever time of the day it is. Now, of course, risk on is reflecting the close now, but risk on is just dependent. It's going to show the reflection of what the overall basket of her positions is up or down when we're looking at the tally over here. So if we held everything that Holly recommended today into the close, we'd be down 15 cents. So I hope that helps clarify that. All right. And Frank has a question. What is that? And the rug is going artificially, maybe? Is that what that word is, Frank? You never know. You just never know. We'll see if the rug gets pulled out tomorrow. Okay, so that's about it for Holly today. Now, I also wanted to point out, man, the Turbo Up Family No Resistance was just spitting out all kinds of tasty little plays today as far as nice tight range breaks with decent risk that actually went today. So I'm talking about this window here, which is also in the handouts PDF sheet that you have in the handouts panel. If you want to try this window out, just pull up that panel and find Turbo Up Family No Resistance. And this little guy was spitting out all kinds of stuff today. So I've written them all down here so I don't have to struggle or scroll through here. But first and foremost, here we are looking at ECL on the 5-minute candlestick. Of course, the little red bar here was the opening candle through a little wide range bar in there. But that's not necessarily a bad thing. It goes ahead and establishes that high and low. And then look what we had here. Just this nice little stair step action up until the top of that wick there. Little flat line action, little flagging action, and then boom, off to the races, and then set up at least 2 more times today. And once again, what is so special about the Turbo Up family? Well, it's kind of similar to Andy's high pro low volume tickers that he likes to showcase as well. Our settings are a little bit differently. Andy's using 5-minute volume in there as well. I choose to use 1-minute volume on these, which just ensures that there is some actual volume coursing through these things when I do get a signal and it happens to be a timely signal. Matter of fact, look at what ECL finished on the day as far as relative volume goes. Keeping in mind how pathetic the overall indices were, 3.33 is what it finished at, trading approximately 3 times as many shares as it normally does. So once again, on a day like today where it's a little wishy-washy and we start to see these tight little patterns with low risk, that's where you want to be. All right, and it's all about timing. You know, as soon as we get it above the break, if we can get in there and make a decent entry and have decent risk, and boy, was the risk low on this guy, because usually I use a 5 minute, or on a 5 minute candlestick chart, we're looking back 15 minutes, which would have been these little guys right here, which that's about the smallest risk area I've seen in a very long time. And then of course, the reward area is way up here. So ECL is one of those guys that this guy spit out today. There were a nice little handful of them today. Home was another one after it capitulated and took a little pullback as it snuggled back up to these lines right here. Boom. You've got a nice clean break with low risk again. So Home was one of the candidates this guy spit out. ATR, another one. Now this one, not quite as thick as the other ones, but it's the pattern that we're interested in. And once again, here we have it. All right. How many shares did that little guy finish today? Hey, interesting on the daily as well. What do we do today? Volume of 200,000 shares. Actually, you know, this was the actual break here, but boy, it sure is moving through there strong, probably a little bit after the fact. But I've got a few more of these that we'll get to at the end where they're just hovering below this area, or maybe just poking out by a hair. So they will be good to keep an eye on moving forward. See Matthew coming through with a question, where is the Turbo Up family? And Matthew, if you look at your GoToWebinar control panel, you should see a handouts section that you can open up with a little spinny dial arrow on the left. And when you open up that handout panel, you'll see office hours. Ooh, wait, that's a different document, correct, Steve? So our favorite PDF is not in there, I take it, right?
No, the one that's in, oh shoot, let me just take a look here. All right, see this webinar was launched again incorrectly, so I don't have the ability to add the handouts panel.
No worries. Today what I'll do is I'll drop this window into the chat area, the cloud link. So
I wonder if we can drop the PDF into the chat link. Have we tried that before?
I think we've tried dropping documents in there, but I don't think it works. But try it out.
Let me see. Yeah.
Yeah.
Back to my web there.
And while Steve's doing that, you know, just getting back to the point here, ATR was another nice clean break with low risk, a little bit thinner than the other ones, but most of these were pretty thick today. VLO, probably everybody's familiar with Valero Energy. And boy, talk about another nice little flag. We got a nice run up. You know, of course, everything in its dog probably gapped up a little bit this morning. But we got this nice little flag action. We got the nice run up, which lets us know the buyers are there. And then all the time in the world to get into this position with very low risk as we're doing this little consolidation dance here. Once again, whether you played it here or anywhere in this area, you know, that risk area is clearly definable, just outside of this range here. Very, very tiny risk with some nice, juicy, and fat reward. And
I'll finish your thought, Jamie. I'm sorry.
Go ahead.
I just wanted to update you. I was unable to use that chat window to add the PDF, so not going to be able to load that for this session, but fear not, if you're looking for that PDF, just email info@trade-ideas.com, and we have that handy. We can reply to you that with it attached really simply and get it to you.
Yeah, and I'll drop this one window into the chat area before we're done here, just to get you by until then. So once again, some really nice plays today. I was really kind of surprised that all these conducive type patterns were showing up today, but hey, I will not look a gift trade in the mouth. GPRK, another example, not near as beautiful as some of the other ones, but hey, on a given day, this is a really tight consolidation. It's just that VLO and ECL, they were really, really a lot tighter than I'm used to seeing in these setups. Once again, nice tight range breaks, nice tight risk areas right down here, and big juicy fat reward areas. So I believe the last one here, MPC, you know, and here we go again. There were a lot of the oil and gas stocks, big liquid guys, exhibiting the same type of flag pattern today. And once again, all the time in the world to monitor these things and get in and have, you know, just a nice drag up with the industry on low risk. So what do we have come through there? That's just 1, 2, 3, 4, 5, 6 that I wanted to point out. There were a lot more in there today as well. Of course, the added benefit of these guys, when we're trying to figure out, okay, if we bought home right here and it's going up and we're thinking, how much room does this guy have? Well, the added benefit of these guys is they're all going to be at all-time highs. And many times we'll notice the same intraday pattern that got us in nice and snugly on the intraday is also taking place or has recently taken place on the daily. It's what we call a fractal pattern. A lot of the old guys that have been around in the technical side of the business for a very long time, they all sing the same song and dance. When you see the pattern emerge on 2 different time frames, well, that's a good thing. And that's one of the things that you can, it's one of the added benefits of this window is that they're all going to be out of their box. Some of them will have just started to get out of their box, which means they could have multiple day runs, which it's never a guarantee, but it is a very nice attribute to have when you're in a long trade that's working. So what I'm going to do real quick here is drop this cloud link into the hopper so that you guys that want it can have it. All right, so that guy is in there. What else do we need to take a look at here? Oh yeah, ever since Andy and been in this window, I've got to say I've been liking what I'm seeing coming through it.
Me too.
And along the same lines of the out of its box, well, this little guy caught my eye today, BR. Which, hey, by the way, look, BR doing the same old thing as a lot of its counterparts.
What's the daily look like there?
We take a vent, you get in nice and tight here, and look, this little guy is going to be one to keep an eye on moving forward because it's just shy, all right? And we're just picking around up here.
And there's yesterday's candle. That little wick on the bottoming tail satisfied a bottoming tail, which came through that alert in light blue down there. Therefore, it puts it on our radar, and therefore we can track it with our price alerts and never lose track of it if we like it. And that's something to like.
Steve just said the magic word. So how do we make sure that we don't miss this tomorrow? Well, we just come right up here. If the high of that candle was 110.05, I should be pretty close. So what do? I right click, 110.06 or 7, all-time high, breakout. Might want to put a little note, check volume. Not saying that it can't go on light to normal volume, but the more the better. So we make sure we're looking at the wrong. If it rises to 110.06, we want to be notified, and then bingo. We're going to see that alert working. It's going to be in there for tomorrow. When I see that, I know exactly what to do. Risk levels are clearly defined. Well, might be a little bit different on the daily versus your intraday play. But if you're swinging it, clearly we'd want to use risk levels somewhere in this area right here. So
there's a question from Lori to continue on the history of the turbo range family.
Okay, easy enough. Now you can see I'm on historical right now, but assuming I was not, I'm in real time now. Now it's just showing me the last 3 things that each of the 3 strategies spit out here. So if I want to view that entire history for today, we just right click, we go to history, and we say all. At which point it will populate the window with everything that came through today. And you might notice as I scroll to the bottom here, boom. These were the first trades out of the hopper today on the 16th. And then this is Friday's business down here. Now, if we just keep on going, this history will go back for approximately 64 trading days. Let's say you get to the bottom and you're like, hey, I'm only down to the 11th and I got no more. Well, you just have to request more by going back to history, and you can, well, the more feature isn't available on this window. It's available on the regular alert windows, but in this case, we just have to designate the time. and go back and go, okay, show me all the trades from the open on this day, or the first hour, or the 2 hours. That's a little bit different than, say, here on the regular standalone alert window. Once we review history, or if I say all, then if we get to the bottom and we need more, then we can just keep requesting more by going here, and it'll just keep chalking it full if that's the way we want to do it. Obviously, that more option is not available on the multi-strat window, but just keep in mind, this is an M window. So there are actually 3 strategies in here. If I go to the strategies, you can see these are all the same strategies. I've just got different market caps associated. 4 billion and higher, those are the green colors. Between 2 and 4 billion market cap will be things in blue like home, and sub 2 billion market cap will be the color yellow. So those are the 3 strategies that reside in the multi-strat window. The same strategy, just segregated by market cap.
Lori's trying to find out how you got to that history function on the windows that you're talking about. Which box on the left do I click to get this? Okay, so any alert window, whether it's an M window, which that is, whether it's an A window, or even a top list window, you're going to be able to use some sort of form of history or time frame.
Right.
And so it's just a right click and history.
And we say all history, and then the window loads up. Same way with the standalone alert window, history, all, or you have the ability to select your own time frame. Say you want to go back to March 1st. You just toggle on the date that you want to see, set the times, and it'll show you that exact time slice. Okay. So, Lori, I think if you just typed in right, that means all good, or if I need to explain in further detail. So, no more explaining or good. Well, that's pretty much all there is on the history, because once again, let me just get rid of the multi-strat and just focus on the standalone. And by the way, alert windows are always going to have the A up here. So we right click, we go to history. And for example, let's say I only wanted to see the opening trades in the first 30 minutes from last Friday, right? So I would select time frame. I would select these 2 bottom radio buttons. And last Friday was the 13th. Of course, how could I forget that? So we go back and we'd say, okay, the day is the 13th. And we got to make sure we're on the right month, would help. Okay, so we've got both of our things pointing to April 13th. Market opens at 6:30 here. So the first hour would be 6:30 through 7:30 Pacific Standard Time. Now, what I'm about to show you seems a little bit backwards, but this is the way it works. So I say 7:30 a.m. as a start time, and then I could put 6:30 in here, or I could just leave it at midnight, right? We'll just leave it for now. And now look, I'm only seeing trades from last Friday, from 7:29 and 30 seconds down to 6:30. Once again, I'm down at the bottom. I need more data to round it out. I go more, and then it takes me all the way home to the 6:30 level, right? So using that little mechanism I just showed you, you can go look at any time slice. You want to see the first 5 minutes of the day, first 10 minutes, you want to see the middle 30 minutes, you want to see the 4th hour. You can go pull the history, the entire history, or specific bits of the history, depending on what you want to do. All right, Mr. Steve, I think that's about all I got today. Looks like we got about 9 more minutes. Anything to contribute before we get Scott to play us out here?
No, just that the general market leads everything else in an individual fashion. Stock might have good news, but in a 500 Dow down tape, it's going to have a hard time doing what it does. So always keep an eye on what the general market is doing. That supersedes your trade timing and direction.
Right, and Lori, I want to ask one more question here. Where do you find the boxes? Could you be a little bit more specific and tell me which boxes you're referring to? Is it the ones where you put in the time?
Yeah, I think that's probably the one she was thinking of. So that's in the history function. Yeah.
Right. So watch what I do here. To get that little box, put in the times and days, we right click and we just go to history. All right. So this is key right here. First, being able to right click to get the pop-up menu. And then it's the second option from the top, and we select time frame. And then voila. There you have your boxes. You can set your dates, your times, and get all the information that you might need there.
It's before you put that back up, because it was a little non-intuitive. Most people probably think start time on top and end time on the bottom, but if you read it, it's actually the opposite.
Right.
Okay, so most recent is the top one, and then the older date is in the bottom. That's why he used midnight from the night before on the bottom. So it's not start and stop. It's actually stop time and start time at the bottom.
Right, and to be, hey, just for confusion, less confusion, start time at the top, 6:30. So therefore, we capture the first hour. Right. It takes a little fiddling with, but once you get it down, it's pretty simple. And Lori, to answer your question, I dropped the cloud link into the chat area of GoToWebinar. So if you look at your GoToWebinar panel, you'll see a chat portion, and you'll see the cloud link laying into the chat, or laying in the chat portion that I just dropped in there. If you click on the cloud link, it'll take you to an instructional page and show you how to load up the cloud link. All right, so I got an okay from Lori, so I think we successfully answered her question. Okay, Alvin was asking, can you expand on the price alert contest message? Oh, you're talking about the contest for the test drive.
Yeah, you have to be a part of the test drive to be eligible for the contest. It's, not for existing users. It's a kind of a promotional deal for the test drive. But yeah, real quick, it's very important. A couple things. Do not send these in until after the Wednesday close. If they trigger on Wednesday or Tuesday, that's a premature trigger, and that's not part of the rules. The rules are you can set these alerts. I recommend you send them in on the prescribed email template that was sent to you guys for the test drive, and then hope that they trigger during the market Thursday and Friday, and right at the Friday close, we're going to look at all of these cloud links, because you're basically going to do what Jamie's going to show you here in 1 second. You're going to set a few alerts, then you're going to right click, and then you're going to save, highlight the alerts you set, right click, and share using the cloud function. And again, it's only open to the test drive users. You all should have an email regarding this particular contest, but this is the price alert function where you're setting them directly in the chart. But I would recommend that you don't let them trigger until after Wednesday's close. They need to trigger Thursday or Friday, so we have 2 days of kind of competition. The idea was to give you guys 3 days to kind of get familiar with what the price alerts are and how to use them, and then share them by using that share feature as the entry into the email that you got regarding that contest. So maybe Jamie will finish up here by him showing how to set a price alert or two and then set them up for sharing.
Right, so for example, let's just add another one in here so we have multiple things to deal with. Let's just say I want to set a price alert for when the SPY busts above the high from today. So I'd right click, I'd say create that price alert, long, okay, it looks good. Okay, so let's just pretend for a moment these were my contest entries. I've got 2 working alerts within the designated time frame that Steve just went over, not too early. So then I want to send these in to have my entry be valid. So what you would do is you have the ability to hold down the shift key and you'll highlight every price alert that you have, right click, and just simply say share to selected price alerts. Then you'll copy this cloud link and you'll paste that cloud link into your email and send it into us, and that is your entry. Because what happens is when Friday comes to a close, Steve, Andy, Sean, all the judges here will load up individual cloud links from each contestant, load those up and see how many positions fired, what your tally is on a percentage basis, if I'm correct there, Steve. And the people who submit and are up the most percent on their collection of trades, that's how we will judge it, who makes the most money in essence. So
you guys want a little hand? You're probably better off playing stocks under $5. That's where you might get your most bang for the buck. But please read the rules incessantly. You have to have at least a $1 minimum stock. You can't come in here with a 15-cent stock and watch it go to 30 and say, hey, I win with 100% gain.
Right.
We're trying to open it up a little bit.
Right. So that's how you share the cloud links. And as Steve said, make sure they don't execute Tuesday, Wednesday. It's got to be execution on Thursday and moving forward, correct?
Correct. Execute. The ideal thing to do would be to wait to submit them until after Wednesday and double check they didn't work. Because trust me, we have to go back and quality check these things, and sometimes people try and sneak one in that was a good one, but it triggered on Tuesday, and that's ineligible. Basically, Thursday, Friday are the days in which the trades are active against the contest.
Right. Okay, got one more question I'm going to get to here. It's Matthew's question before we move on here. Matthew was asking about new high filtered on new daily highs, for example. How do you see what filtering is being applied? All right, Matthew, and that is on the alert that you're referring to, I would assume. So I popped into configure on my alert window, and as soon as it decides it wants to load up, you can see we've got regular new high up here, and then we've got new high filtered. So assuming you're talking about this alert here, new high filtered, we can always click here and click on help to get the exact definition. But to paraphrase, what the definition is going to tell you is that this will trigger on anything. The most obscure stock in the world that never trades clicks a new penny high, that's satisfied, right? This new high alert waits for a little bit of volume to be done before it reports it. Okay, that's the big difference. And of course, to get that exact definition, when you do click on help, it's going to take you over here and let you read all about the alert or the filter. So I hope that's what you were referencing. If not, just pop us an email at info@TradeIdeas, or you're right, you can always ask Barry.
Real quickly before we move, Marcia, I typed in a response to you. That's a link for the Trade Ideas 301 and 401 webinar, because your question is asking about going over backtesting. We don't have enough time in this session to go over that, but we've done extensive content in those playlists that I gave you. I believe the playlist is also active at the top of our chat window. If it's not, I'm going to drop it in right here. Call it TI University. And for anybody who wants extended studies, there's 6 hours of content on that link that I just dropped into the chat window. So while we talk to Scott on the way out, that should give you guys enough time to explore and save those links.
Yes, indeed. Yes, indeed. Okay. Very good, Steve. Scott, if you're waiting in the wings, I think people are ready to hear about the test drive and all the cool stuff that comes along with it.
Yeah, it sounds good. So test drive registration is extended until Wednesday, so you can hop on that today or tomorrow. You still get 5 full days. Just go to trade-ideas.com/test drive. It's a great way for regular subscribers to try out the premium features before upgrading your subscription, or for those of you that haven't yet become subscribers to try everything out. Real easy to sign up. We do charge a little bit. We charge $8.88 to cover your exchange fees for the month, so you get the real-time data, and also to help us out with the extra support that we need to provide. So between now and Wednesday, sign up. If you sign up today, you will get the most out of it compared to signing up on Wednesday, because we have the special events this week, the special webinars. But either way, you get 5 days of 5 trading days of unlimited premium access. So get in on that. It's a good opportunity. We also have an ebook out that both Jamie and Steve participated in authoring, so go ahead and get a copy of that, trade-ideas.com/ebook, for 5 strategies on how to, stay above the water when the market turns into a post BTFD market and you can no longer just buy the dip. you got to have other strategies. We haven't had a bear market in a long time. Y'all might not have all the tools necessary, so make sure you have some. Just go download that book. The podcast is back after our hiatus, so make sure that you download the new episode. Subscribe to the Trade Ideas Podcast by searching for Trade Ideas Podcast anywhere that you can listen to podcasts and subscribe. And then you can get the previous episodes, the newest one, and the one before that was a nice one. We had Michael Noss on as a guest too, so check them out. There's a code if you want to activate your subscription and you decide you don't need the test drive, just go ahead and you hop on this code. It's good for the rest of this month. You can plug that in when you check out Spring Swing, and you have to use all caps just like you see it. You can download these slides by going to your handouts panel on your GoToWebinar interface and expanding that and clicking on the blue link to download that. If you have any questions, just email us info@trade-ideas.com, and you can reach out to Steve or Jamie directly using their emails. Follow us on Facebook and share everything that we post with all of your friends. And then you can also follow Steve Gomez and Jamie on Twitter. There's Today Trader Steve and QuantBots Jamie. Thanks, guys. We'll have the recording up later on tonight or tomorrow morning. Thanks, Steve and Jamie. Have a good one.
Thanks, everybody. Thank you, Steve, Scott. We'll see you guys tomorrow.